Being the largest company in the world with a valuation of almost $2 trillion, Aramco's IPO was eye-catching to many investors. Even though they only offered 1.5% of the company to the public, Aramco managed to raise $25.6 billion from its IPO, valuing the firm at $1.7 trillion. Not only that, but shares climbed up by 10% on the debut, valuing the company at a record of $1.88 trillion. In this video, we'll be discussing whether Saudi Aramco stock is a good buy or not, but before that, as always, get your cup of coffee, smash the like button, and let's roll the intro. Saudi Aramco is one of the largest and most profitable oil refining companies in the world that went public in December of 2019 on the Saudi stock exchange Tadawul. With a valuation of around $1.7 billion, Aramco functions as Saudi Arabia's national oil company, responsible over 270 billion barrels of crude oil reserves that they extract at the fraction of the cost of the rivals. Aramco's importance to Saudi Arabia is similar to the country's importance to the global oil industry. Saudi Arabia accounts for 18% of global petroleum reserves, while Aramco is one of the largest oil exporters in the country. Saudi Arabia is extremely dependent on petroleum exports, which comprise 50% of the country's GDP. Aramco is state-owned and controlled by the Saudi government and the royal family. However, the Saudis did not found the company. That distinction goes to Standard Oil Company of California, now known as Chevron, after it received a concession from the Saudi government in 1993. At the time of this video, the stock is worth around 36 Saudi riyals, which is just less than $10. This values the company at somewhere slightly below $2 trillion. While the company's valuation is below Crown Prince Mohammed bin Salman's $2 trillion target set about 3 years ago, it's higher than the company's fair range estimated by a majority of money managers polled by Bloomberg News. According to Bloomberg, shares dividend yield will likely be between 4.4% and 4.8%. That is lower than most other public oil and gas companies. For example, Shell, BP, and ExxonMobil pays 6.44, 6.83, and 4.9% dividends yield. In general, there are no doubt that oil and gas company stocks fluctuate for many political and economical reasons. However, these fluctuations will be amplified with Aramco and Aramco stocks. That is because only 1.5% of the company went public, which means the company is still state-owned and controlled by the Saudi government and the royal family. So the company's fate is under the Saudis' political and economical decisions, in addition to the surroundings geopolitical events. A few reasons that will affect the price of Aramco stocks are the following, starting with the economical and ending with the political reasons. An oil company's ability to extract oil is potentially limited by its available sources. Aramco enjoys more access to potential oil sources both on land and offshore than most of its competitors. However, if they lose some of that access, their stock could decline. Due to its size and importance, Aramco's performance will have a strong connection to that of the Saudi economy. It is possible that if the country suffers from an economic downturn, Aramco stock will suffer as well. In order to capitalize on its significant energy sources, Aramco will require tremendous financial resources. While this is true for all energy companies, it is especially important for Aramco, which controls over 100 oil fields. The company's stock could remain strong as long as there is cash on hand to take advantage of the energy resources available. Maybe that is the reason behind the low dividend compared to other oil and gas stocks. Or maybe since it became a public company, the $75 billion that it will pay in dividends in 2020 will cause a problem in the cash flow for the company. $75 billion counts for just under 70% of its profits. taking the year 2018 profits. Oil and other energy markets that provide heating are often directly connected to changes in weather patterns. While this is certainly not a guarantee, it is sometimes the case that oil stocks will rise in value as the demand for heating increases during the winter months. Demand for oil and other energy-related resources can fluctuate according to the performance of international markets. For example, a stronger economy will usually require an increased amount of oil in order to satisfy its industrial sector, in addition to the increased demand for workers. Since oil is often used to power both private and public modes of transportation, lower unemployment rates are often a sign of an uptick in the number of people commuting to work, which in turn leads to higher demand for petrol. Saudi Arabia recently tripled its renewable energy target and has successfully tendered for large-scale projects in wind and solar energy. Yet alongside this, over the past decade, Saudi Arabia has increased its oil production by 2 million barrels a day. However, as the world shifts toward renewable energy and natural gas, the company might have a hard time growing unless it pioneers in natural gas exportations. However, according to current statistics, Saudi Arabia is not even one of the top 10 natural gas exporters. If the Paris Agreement forecast for energy became true, Saudi Aramco and its stock will be tremendously affected negatively. This is because it was predicted that the production and demand of oil will decrease while renewables and natural gas will increase. A quick science lesson. Natural gas is usually preferred against coal and oil because when burning it, it releases less carbon dioxide, so it's considered to be a cleaner fossil fuel, thus it's preferred. The Saudi Arabian economy relies heavily on its special, and some argue preferential, relationship with the US. For this reason, the Saudi economy is often influenced by the performance of the American economy, with a slowdown or recession in the States potentially causing a decrease in oil demand. This will result in a fall of oil exports in Saudi Arabia. And obviously something like that will heavily influence Aramco's stock negatively. The Saudi conflict with its regional neighbor Iran can cause oil prices to increase if it's perceived that the supply of the oil will not be able to meet global demand. An example of this could be if one country seizes control over the other's oil tankers. Even if this occurs over a short period of time and with the use of political instead of physical force, the market may panic, causing a sharp increase in value until the situation is resolved. As Aramco provides 50% of Saudi Arabia's GDP, it can be considered the golden opportunity to mess with it and ruin Saudi's economy. A good example was the attack on Aramco a few months ago that triggered the biggest jump in oil prices in almost 30 years, as half of Aramco's oil production completely stopped. According to the Reuters, Yemen's Iran-aligned Houthi group, which is battling a Saudi-led alliance in Yemen, claimed responsibility for the attacks on Saturday on sites run by state-owned Saudi Aramco. Again, obviously something like this will massively damage Aramco's stock value. If you're interested in the whole story, I'll make sure to leave sources in the description so you can read what happened in details. While it can be argued to the contrary, many investors believe that the lack of transparency and business equality in Saudi Arabia can be a cause for concern when investing in one of its companies. The royal family's absolute power over the court system and government can often make traders uncertain or even reluctant to trade a specific Saudi-based stock. Maybe that is one of the reasons why Saudi Arabia decided to release the initial public offering in Tadawul, which is the Saudi's stock market, rather than in one of the other popular stock markets like the London or New York stock market. In my opinion, Aramco is not a good stock when it comes to long-term investing due to its large attachment to Saudi's policies and economy rather than being an independent company with no strong external influence. However, it is probably a good stock if you are a day trader who is interested in taking advantage of price fluctuations in the global oil market, or a thematic trader who is often targeting commodities in general, or oil more specifically, or finally a trader who is interested in the relatively large dividend they pay. Personally, I won't add Aramco to my portfolio, as all of the stocks I invest in is for the long term, so like around 3 to 5 years investments. And note, this is not an investment advice, it is just the conclusions of my research. I hope you found this video interesting. If you made it till the end, then make sure to like, share and subscribe for the YouTube algorithm, and write down "made it till the end" and you'll get a free Aramco stock from me. No, I'm just kidding. If you are interested in trading stocks and checking my stock portfolio, then feel free to click on the card in front of you. If you have any questions, write them in the comment section below. This is Muhab, and I'm signing out.